In personal income tax, the revenue authority will grant you 20% of your total earned income plus 200,000. That is a consolidated allowance given to you as a relief. Prior to 2011 Personal Income Tax Act, the revenue authority do grant you children allowance, dependent relative allowance, personal allowance, and all that, and other allowances coming out from your job. But in 2011 Personal Income Tax Amendment Act, they collapsed all those allowances into one and call it consolidated allowance. And consolidated allowance means 20% of your total earned income plus 200,000. For example, if you earn 10 million in a year, your allowance will be 20% of the 10 million, which is 2 million naira plus 200,000, meaning that 2,200,000 will be deducted from 10 million. So the balance will be 7,800,000. That is what will be taxed. That is exactly what will be taxed. And that will be taxed, that is 7,800,000 is what we call taxable income. My name is Dr. Kennedy Iwundu. I'm a forensic accountant. If you have a limited liability company and your company has paid tax, don't assume that you have paid your tax. If you are a pastor and you are earning more than 30,000 minimum wage, you are expected to pay tax. Somewhere in 1961, you have the Income Tax Act, ITIMA. The local government is not supposed to collect personal income tax, not it. In the Constitution of the Federal Republic of Nigeria, tax is compulsory. If you are working in a place, you are going to pay personal income tax based on payee. There are two assessments in personal income tax. Personal income tax has two assessments. One is self-assessment. Self-assessment is if you are self-employed, you are working on your own, you own a company, you own a business. So you fill form and assess yourself, declare your income, and compute your allowances and pay whatever you are supposed to pay. But if you are working as a staff of a company, the company is mandated to deduct taxes from their staff and remit to the relevant revenue authority. Now, if you are working as a staff, then your tax will come under payee. For employees, they pay tax as payee under personal income tax. But for employers pay under self-assessment. So we should get this thing clear. There are two assessments in personal income tax: self-assessment for employers and payee for employees. Now, under the employees have what we call employment expenses. What are these employment expenses? Employment expenses include those expenses your organization deducts and remit to the relevant government agencies. For example, pension. Every month, government deduct pension from your salary and remit to PENCOM and pay to the pension managers who are in custody of this money. Every month, if your organization is registered with National Housing Fund, they make deduction and pay to National Housing Fund. Every month, if the organization is registered with National Health Insurance Commission, they do deduction and remit to National Health Insurance Commission. If you're also registered in mortgage interest, every month they do deduction and remit to mortgage interest, mortgage institution. So at the end of the day, these deductions will be removed from your salary or from your earnings. Whatever that is left will now be subjected to taxable income and it will be taxed. Meaning that as an employee under payee, you have consolidated relief, which is 20% of total earned income plus 200,000, plus all the employment expenses. All the employment expenses include what I mentioned: PENCOM, pension, deduction and remittance, National Housing Fund, National Health Insurance Commission, mortgage interest, and life assurance premium. These are the deductions from your salary before your taxable income will be taxed. My name is Dr. Kennedy Iwundu. I'm a forensic accountant. If you have a limited liability company and your company has paid tax, don't assume that you have paid your tax. If you are a pastor and you are earning more than 30,000 minimum wage, you are expected to pay tax. Somewhere in 1961, you have the Income Tax Act, ITIMA. The local government is not supposed to collect personal income tax, not it. In the Constitution of the Federal Republic of Nigeria, tax is compulsory. Join me as I take you to this journey I call tax accounting, as I am going to give you a profound analysis of the concept of taxes as it affects you and your business. Visit www.taxaccounting.com.ng where you see my videos, tax analysis, as well as the recent changes in tax laws in Nigeria. Follow me on YouTube, Facebook, Instagram, and Twitter at Tax Accounting. You can always get in touch with me as your tax consultant to help you with your tax needs.